Hey guys, welcome back to the podcast. As always, I'm your host, Akil Stokes. In today's episode, we're going to talk about how to gain a feel for the market. And I'll give you a clue. There's only one way you can do it. Now, if you haven't done so already, make sure you head over to our website, www.tier1trading.com. Check out the free workshops and webinars that are available after you're done listening to the podcast. Doubt that's going to happen, but a good lesson on morphing analysis. Not giving up on your trade. And I can tell you what, if you're going to be in this game, we talked earlier about not falling in love with your setup. This is why it's important to understand technical analysis. This is why it's important to know different ways. We call it having different strikes in the market, because our live room veterans, they can tell you that how often does a trade play out perfectly? Not too often, right? Not too often. Many times you're going to have a setup. It may not give you the first strike or the fairy tale entry. You may have to wait for a secondary reason to get involved. And there's no problem with that. But again, that's the difference between the pros and the Joes, right? The pros have different protocols where it's like, okay, this didn't work. Now I look for this. Okay, that didn't work. Then I look for this. They don't give up on it because the opportunity is still there. It just may come in a different look. Whereas someone that doesn't have a strategy, someone that doesn't have different ways to attack a market, what do you think they're going to do? If that fairy tale way doesn't come at once, do they stick with it or do they give up and go hunting for something else? Hey, Billy. They go hunting for something else and they can miss a very good opportunity. So, good stuff. Any questions for you guys? I always say this is going to be a short one, and then I get to rambling, and it gets really long, 25 minutes later. Yeah, other investment, product, or strategy. Yeah, and typically, Rain, which now it's going to confuse me because I thought Rain was Ryan yesterday, and now Rain's here, right? Typically, they're gonna go with emotional baggage as well, right? Because if you're all pissed off because you missed the perfect trading opportunity and you didn't miss it, but it didn't, or maybe you missed it, but maybe it just didn't give you what you need. Now you're all fired up and emotional, and now you're heading to that next investment product, right? With all that baggage. Again, it's like it reminds me of old school me at the casino where I go to the blackjack table, I get absolutely destroyed, right? And then I head over to the craps table to try to make it back. Oh, the odds are in my favor at the craps table. Right? And then I get out my game plan. Yeah, it turns out crap. Yep, that was perfect. Someone on the TradingView chat just said, there is always tomorrow, no need to force yourself. Yep, always trade when it's stupid clear. And it's simple words, beautiful words, by the way. Simple words, but not enough people understand it. Not enough people understand, because it sounds corny. Everyone wants to trade because you want to make as much money as you can, as fast as you can. It's really about being patient. Less is really more. That's a great lesson for life as well. But less is so more. It's not about taking. It's not about the quantity of the opportunities you take. It's about the quality. If not, you're just wasting your money. Yep. If it is not a clear grade A setup. My trading mentor always told me this. He said, you want to take your best trades, right? He said, and this is probably a bad way of looking at it, but the analogy makes sense. He says, I only want to take the trades where there is a bag of money sitting on the floor that says, take me, I'm free. Now, again, not the best analogy in hindsight, because like we don't want to, nothing's a guaranteed victory. I've learned, I grew up in a rough area, so it's like you don't touch random bags of money. They're probably drug money, and someone's going to come looking for it, and you end up, getting shot or something. So, not a great analogy, but you guys get the point. You take the ones where it's a free money, where it's obvious. It's stinking obvious, and by obvious, you mean it meets your plan. It meets your plan. It said being right is most important. I would say this: Being right in your process is most important. I don't think being right in trading is important at all, because we can't judge ourselves off right or wrong, because the market doesn't really care. We can have, again, we can have the best setup in the world and it could still lose. But being right in our process, I would just shift it a little bit to that. I think that's important. Being right as far as we took a grade A trade. We did everything we were supposed to do the way we were supposed to do it. Because if you've done your homework, your back testing, right? Your market research, if you're an entrepreneur in any other type of deal, you know that over time, that's what's going to bring the money in. See, now we're disagreeing. Technical analysis isn't enough. You must feel the market. I'm reading some of the comments on TradingView. I disagree with that, but it depends on what you mean by feel the market. Now, you never want to trade off your feelings. You want to trade off your technical analysis. That's your proven thing. Now, if by feel the market you're referring to intuition, I do think intuition is a real thing. Intuition is earned. It's not given. You can't be given intuition. Intuition has to be earned. How is intuition earned, guys? There's only one way. Intuition is 100% real. That's the professional feel. But how is intuition earned? Rain says repeated execution. I'll get back to the advanced pattern question later. Reading of charts. There's one word I'm looking for. One word I'm looking for. Well, how the market feels is that's your technical analysis. Technical analysis will show you exactly how the market feels. There we go. Good job, doctor. Experience. Now, experience can come from back testing. It can come from time on the chart. It comes in a lot of ways. This is why the number one thing we want to do is gain experience. This is why time on the chart is so important. It's the same thing as this. You know, I coach track, but any sports, the more you practice, the better you'll get. Right? Is there anything right? So intuition just isn't time, right? We can have someone that trades for years, right? If you trade for years, but you practice once a month on the charts, you're probably still, your learning curve is, well, I was about to say, you're probably still going to suck, right? But your learning curve is going to be a lot slower. So someone that has traded for 6 months, but practices 10 hours a day, like I did back in the day when I was unemployed and had nothing better to do, you're going to gain that experience and gain that intuition a lot more than someone who has practiced 1 hour a month for 10 years. But intuition is gained through experience. And but it's still not enough to trade off of intuition. What you need to do is you need to transform that intuition into rules. So what we always talk about here in a live room is we want to identify what that intuition is, right? Because intuition is something that's technically based, right? It is a feel, right? It's a feel, it's an idea, it's a hunch, but that hunch is based off something, right? It's kind of like deja vu, right? Deja vu just isn't random. It's your mind putting together pieces of things that have happened before, like memories, that your experiences. Or it's the multiverse, but we'll save that rant with parallel universes for another time, because that's going to take a whole nother hour. Don't get me started on deja vu and the multiverse and parallel universes. Oh my gosh, quantum physics. Ooh. But it's based off something. So what we want to do with our intuition in the market is when Orsi has intuition, where she's like, Akil, every time I see this inside bar, like I know we're going to break to the upside. I know it. Well, how do you know it, Orsi? I can't just put my finger on it. What Orsi then needs to do is Orsi needs to go back to the charts and research. She knows what she wants to look at. She needs to go through her charts, look for the specific thing, and then find out what the clues are. And all of a sudden, Orsi says, well, you know what? What I notice is that this inside bar that I'm looking at, it's an inside bar at the top of a trend with a directional bias. It completes in the upper third of the previous mother bar. And now she can backtest that. She's got a theory, a hypothesis, right? Yeah, it's a big word. I'm not good with big words. I try. And now she can test it. Yeah, got it. Now she can test it. And now once she tests it, Now she's got statistical data to back it up. She can make any tweaks that she wants, and then she can add it to her plan. And boom, something that was intuition now turned into something that was testable, verifiable, and repeatable. See how it works? So that's how you evolve as a trader. That's how you continue to grow, right? You don't just do the same thing the same way. Because like I said, you do have to get a feel for the market. Market conditions change. What I was trading back in 2009 is completely different. This is a completely different game. If I were doing the same things I were in 2009, I would not be consistently profitable. I can be honest in telling you that. If I didn't change at all, it would not happen because these markets are completely different. So that experience and that feel for things changing, that is important, yeah. But I just want to clarify that up so we don't. And I know you didn't mean it that way, but some people when they hear feel, that's an excuse. Like, oh, I can trade off my feelings. Yeah. Like, no, you can't. You have to be able to quantify. Example today, the market is still worried about Omicron. I do day trading, so I must see what is going on. But you were right, yeah. Yeah, but also, the market's always worried about something. If it's not, the market's not going to move. So, but it's still our technical. We want to understand the lay of the land, yes, but it's our technical bias is going to tell you what the market feels, right? We can say that the market is still worried about Omicron, right? That sounds like a Transformer movie every time I say it. Like waiting for like Optimus Prime to come out, but. The question is, okay, we understand that we're concerned about Omicron, but how does the market feel about it? Is it fearful of it? We talked about this earlier, right? We talked about risk on, risk off in the pound, right? Is it macaron? Is it fearful? Are fears subsiding? What's going to tell us that? There's one thing that tells us how the market is feeling. I don't know why I'm swinging two fingers in the air, but there's one thing. I guess I didn't want to wag it like I'm saying no. What's the one thing that can tell us how the market feels at any given time? Because of the price chart. Yep, price, yep. Because price is a visual representation of all the actions taken by the participants in the market. So yeah, we definitely want to understand the lay of the land, what's happening. And then we always want to go back to our technicals to see, okay, well, what is the reaction? Like yesterday's Canada news, which killed my home run trade, which had a poor reaction. It shouldn't have had a poor reaction. Mad about that. It only had a poor reaction on the single pair I was trading. No other pair did anything else except for that one pair. Stupid Aussie. Man, that's a great first session. You guys enjoyed that? Hope you enjoyed the podcast, and remember www.tier1trading.com. Free workshops, free webinars. There's also that 14-day trial membership you can take advantage of. Get on the platform, download software, interact with our community, and do a lot more. That's www.tier1trading.com. I'll see you guys in a few days.